revenue recognition principle. Now, what is revenue recognition principle? Revenue recognition is a part of GAAP that states revenue is recognized when a critical event has occurred, right? So revenue recognition, I'll just brief you out before explaining further. Revenue recognition means whenever revenue has occurred, whenever that transaction has occurred. Remember the accrual accounting of accrual principle means whenever the event has occurred, we should record in that accounting period. For example, if I am making sales in January and the payment is due in April, so I will record in the previous financial year from 1st April to 31st March, right? So whenever the transaction is occurred, whenever the revenue is occurred, we should recognize in that particular period, in that particular month. So this principle uses the accrual method of accounting, that is when revenue is earned. According to this, revenues are recognized when realized and earned. It is a straightforward principle. Revenue is recognized whenever customer make payments. So I can just brief out again. There are two ways to recognize the principle. Number one, if I am making sales in January, I will be recording the revenue in January. Though the payment is received in February, March, April, whatever month it is received, I will record in January only. This is as per the accrual method of accounting. Now, this is one way. That payment is not received as and when revenue is occurred. Second is when payment is being made side by side. When customers are making payment as and when the sale transaction is being occurred, then also we will record the revenue. For example, I'm making sales in February, getting the cash payments or check payments that are received in February only, we will record the revenue in February, right? So if cash payment is received, well and good. If it is not received, it is received later, but we are incurring the revenue in the month of February, we will record in February, right? Whenever the production takes longer, the accounting for revenue becomes more complicated, right? Why there is complication when production takes longer? This is because production is taking the time period maybe 6 months. So the company is difficult to say when is the raw material converted into work in progress into the final product, when that final product will be sold. So if it will take very much longer, maybe year, maybe 6 months, it is very difficult to relate that final product and its sales, right? So this is revenue recognition principle.